everyone, and good morning. I am Shrishti Sangal, founder My Money Panda. Thank you for tuning for today's session. Thank you, Meenakshi, for taking out time and addressing our audience. I will first start with your introduction for benefit of our audience. Ms. Meenakshi Dawar is the senior fund manager at Nippon India Mutual Fund. She manages more than 15,000 crores across three schemes: Nippon India Flexi Cap Fund, Nippon India Value Fund, and Nippon India Equity Hybrid Fund. She has over 15 years of experience in fund management and equity research. Prior to joining Nippon Life India Asset Management Limited, she was managing large cap and hybrid funds at IDFC Mutual Fund. She has done her post-graduation in management from Indian School of Management, Ahmedabad, and engineering from IGIT Delhi. So we have seen a phenomenal market tally over the last 1 year, Meenakshi. How you are looking at the market valuation and your outlook for the new year?
So, Shrishti, you're very right. Markets have been doing very well over last 3 years, in fact. And a lot of this has also because of the re-rating that we have seen in the market. And this re-rating is also backed by the growth momentum that we have seen in the market. So if you see prior to COVID, every time market would assume that 15-17% growth rate and we would enter a downgrade cycle. But this is after a very long time that we have seen that whatever analyst expectations have been, the market has been able to suppress those expectations and deliver better than expectation. And also in terms of the global context also, our earning delivery has been quite resilient compared to our global peers. And domestic liquidity, as we all know, have been very, very robust. So going forward, some of these tailwinds in the market remain, that our earning growth rate is proving to be far more resilient than what it was in the earlier period. There are a lot of levers for growth, and in terms of comfort of delivering that 14-15% earning growth rate is quite high. But in the short term, the multiples have definitely gone up, and therefore for somebody to expect that our market will replicate the kind of returns that we have made in last 3 years would not be right. But on a normalized level, the earning growth rate remains quite strong. And for a medium to long-term investor, our market definitely is still giving us opportunities to make money.
So you are one of the leading female money managers in India. Our markets are becoming developed and mature. How do you see women participation shaping up in an Indian financial industry?
So, if you just zoom out a bit, we have definitely made good progress in terms of women participation in the industry, but we are still a long way to go compared to what we can be, what is the potential. So, I think in terms of the opportunity that this industry has for women participation to increase, there is definitely a lot of headrooms. And considering that now there is significant number of women who are part of this industry, it should only inspire more women to come and join this industry. So I don't think that if you compare this industry to any other industry, to bridge that gap in terms of women participation, I think this is the easiest industry to cover up that gap. Like we have seen in IT, right? As the industry matured in India, as there were a lot more opportunities within India, we saw that reasonably good number of participation from women employees. Or if you see women employees in IT as percentage of total, they are one of the highest compared to any other industry. And I think in this industry also, there is significant scope for that number to go up.
Right. So women are generally stereotyped to be dependent on men for investment decisions. How do you see financial awareness developing in society?
See, there are two reasons for this kind of behavior from a women participant. One is the intent, right? Whether you really want to do it, or what we have seen in our circle, most of this job of money management is outsourced to your, maybe to the husband or maybe dad, because women feel that they are better off managing their money. But uh, and that can be because of you not spending enough time in developing that knowledge, or you do not having enough amount of network, enough amount of understanding of these things. But as and when things progress, right, like we were saying that women workforce participation going up, they are becoming savers, they are having capital to invest in the market. I think that intent part has to definitely go away from, and that has to come from women from within, right? That we need to take control of our financials. We need to spend that time in developing understanding of what are the various instruments that we can invest in, or developing an understanding of that how critical this process of wealth management becomes to you as you grow higher compared to income generation, right? So a lot of women are now focused on that income generation part, that women, the new generation is quite focused on having their own careers, having their own incomes. But as the journey progresses, the wealth part becomes far more important than the income part. So to take care of that wealth management incrementally, therefore you have to spend that time, have that focus, that this is really, really critical for me, and therefore I need to do it in developing that capability.
So we want to look at financial independence. Why do you think financial independence is critical for everyone in general and women in particular?
See, we cannot undermine the importance of financial independence. We all know how critical it is. This is the bare minimum that you would expect from yourself, that you need to have that financial independence and control over your life, because ultimately your financial decides the kind of life that you would be living for yourself. So being dependent on that, in that financial aspect, really does impact the kind of life that you can live, the kind of confidence you have in your life. So financial independence is really important for everyone. Like you said, it is not about men, it is not about women, it's about everyone having that capability, having that decision in their hand in terms of how they want to lead that life. So earlier, the social fabric was very different, right? The kind of duties that were divided between men and women. If you go back to 100, 200 years, the social fabric, the cultural fabric, the opportunities that women had were very different. But if you look at women of today, in terms of the kind of opportunities they have, we have come a long way. So we have to take advantage of the opportunities that have been created for us. And therefore, in this environment, aspiring for financial independence is, I think, bare minimum for most of the women of current generation, because of the inherent change that has happened in the society.
Right. So, how mutual funds can help in achieving financial independence?
See, earlier, if I have to just talk about this topic, of women being there in terms of saving, most of the saving food pool earlier for women would go into investments in gold, right? So in forms of jewelry, in forms of other investments. So that used to be a major allocator of capital. But we all know that as time progressed, physical saving as a proportion of overall investments will come down in share, and more evolved product, which are more financialization of saving that we keep talking about, in form of mutual funds, in form of equities, etc., will incrementally become larger portion of allocation than what they are today. So for anybody to start their journey of financial saving, I think mutual fund is a very easy instrument to adapt compared to any other instrument of direct equities, or maybe other instruments like bonds, etc. Because here the market is developed, there is enough amount of transparency, the ease by which you can build a portfolio, the whole ecosystem is quite developed for you. So anybody who wants to take that journey forward, I think mutual fund have become quite prominent and quite important in that whole phase.
You manage a large flexi cap fund that invests across large, mid, and small cap companies. Can you touch some light on the fund and how you structure your investments in these?
So flexi cap fund is the category of fund where there is complete flexibility in the hand of fund manager in terms of which market cap that you want to invest in. So this is a good category in terms of you having exposure to large cap, mid cap, and small cap companies in your portfolio. So if you look at India, it's a very interesting market, right? On one side, we have large scalable companies, which can be your large financial companies, technology companies, metal, cement, etc. So a lot of these themes are dominated by the large cap universe. So when we are doing our fund construction, we at 50-60% of our capital allocation goes to these kind of companies, which are companies of scale, and scale is their advantage. So a lot of allocation goes to large cap from that bucket. And India being a growth market, there are a lot of these sectors, there are a lot of these companies which are evolving. They are small or mid in nature because currently the profit pool itself is small. So we build a portfolio of companies which are more innovative, they have innovative product, or they are operating in sectors which have high growth potential over a long period of time, and therefore build a portfolio of large, mid, and small companies. So coming back to the discussion that we were having, for any investor to start investing in mutual fund, this is a very good category to start that journey, because when you're starting this journey of mutual fund investment, it can be a little bit overwhelming for the investor that which fund should I pick up? Should I pick this large cap? Should I pick mid cap, small cap? How do I build my asset allocation? Should I have larger allocation to small cap, mid caps, or to large caps? In this fund, a lot of those decisions are already taken for you. So if you want to start your journey of investing, this is a good category to start that investment journey for you.
I hope all the insights given by you will help the women viewers, and they'll definitely go for this option as well.
Yeah.
So we have some questions from our YouTube followers. So one is, if I need to pick a mutual fund for 25 years, so what do you suggest? It should be Nifty 50 index or flexi cap?
See, pick a fund for 25 years. There are what the two funds that you're comparing are very different, right? Nifty 50 is a very passive allocation of capital, where you're not taking any risk on the fund manager or on the organization. You just want to get your returns in line with whatever the market returns are. So there, the expectations of return should be that 12-13%, which have been the CAGR returns for over a longer period of time. And if you get your timing right, you will get it a little better return from that. Whereas for every other category, if you have to plot it on the risk curve, these passive fund Nifty 50 will be lowest in terms of your risk, in terms of your equity exposure. But flexi cap or any other category that you're choosing, you are investing in a desire to generate higher return than the market. And we have seen over a longer period of time, because like I said, there are a lot of companies, innovative companies in India doing good job. They can grow faster than the market growth rate. So a lot of these, some of active fund managers have demonstrated that over a long period of time, they can do better than the Nifty 50 returns. So if your time horizon is reasonably long, like you said, you want to invest for 25 years, you can build a portfolio of some of these schemes and invest in them in a systematic manner. The way to choose, maybe for a beginner who is less aware of where to go, the ideal thing is to pick a fund maybe which has a track record, demonstrated track record, has reasonable size, and you know the organization or the person who managing that has a process in place, and therefore there is longevity of return that you can expect from that scheme.
Okay. So like you have earlier said, women likes gold. How can we invest on gold with mutual funds? How it is different from traditional gold investments?
See, now there are a lot of options to not physically buy gold, but invest in gold through financial instrument, right? So we will also have an index which replicate the return that the gold is making. And then the government also keeps coming out with these gold bonds that you can invest in over a period of time. Now, what is the major advantage of buying it in this form versus a physical form is, first thing is the liquidity available to you, right? For you to go and transact in physical gold can be a bit cumbersome, versus here, whenever you need liquidity, you can just have it in a click of a button and get that liquidity in your hand. The second thing is that traditionally, you're not sure about the purity. A lot of these gold has been bought from an unorganized segment. You were not sure about the quality, etc. So all these concerns that you would have earlier, they would have been taken care by investing in a financial instrument where you are 100% sure of what you are getting. And third thing is that in these lot of these schemes, you get a little better returns than what it is for the regular gold investments, because government has incentivized. So in this, in terms of if you invest in gold bonds, for example, you will get that 2% extra return per year. So there are a lot of these instruments. You can evaluate what suits your profile in terms of liquidity available to you, ease of transaction, etc., and then can go ahead with that versus a physical gold.
So do you think gold mutual funds are better than gold commodity and gold rated instruments?
So better in terms of those aspects only, like I said, the ease of transaction, the liquidity available to you, etc., exceeds what it is for other, buying that in physical form or in that commoditized form.
So it's pleasure connecting with you, Meenakshi. We have got
Yes.
very good insights from you. And definitely, I think the women who will see our video and they'll learn they'll go towards buying mutual funds instead of gold.
Yes, thank you very much, Shrishti. It was pleasure interacting with you all.
Same here. Bye-bye. Thank you.
Bye. Thank you.